Well, many of the forces that drove our economy this past decade lost their luster last year as we sank into a national recession. In the fall, we were reminded of some hard truths, like a housing boom funded by easy money and reckless lenders is unsustainable, that energy prices can still be just as volatile as any previous boom and bust cycle, and that our country's financial system still favors Wall Street over Main Street. In our next segment, we're going to examine the role credit will play in an economic recovery in 2010. Earlier, I visited with Gary Simpson, the chair of Commercial Bank Management at OSU Spears School of Business. Well, I want to start with the elephant in the room. Over the past 18 months, we've seen about $245 billion infused into the banking industry. Yet at the same time, we've seen them pull back on all their lending while giving what people estimate, $30 billion in bonuses. I have to believe that just gives people like you a knot in their stomach.
Well, it does. I'm not here to defend the large banks because that's the group that you're talking about. Because most of the money, the tax dollars, went to the largest banks in the country, and they are huge institutions. I would not even refer to them as a bank. I would call them a financial conglomerate. But their lending, they have pulled back from lending, and there's several possible reasons. One is, and this is the one that you probably hear about in the press a lot, is that they can acquire their funds at such a low rate, less than 1%, and then they can turn around and lend that, put it into like treasury securities, and get 3% almost riskless. Now they're taking some risk on interest rates risk, but in terms of credit risk, they're not losing anything. So that's one reason, at least hypothesized, why they're not lending as much.
Now, there's a great deal of talk in our nation's capital about increased regulations on these big banks, the ones you call conglomerates. But you say we should be careful in painting all banks with this broad brush?
Definitely, definitely. The kind of a simple-minded analogy, if I could use it, is that, let's say, for example, it's a grade school, and the biggest kids there are sixth graders, and 7 or 8 of the biggest sixth graders go out and trash the playground. What could happen is that the principal comes in and says, no one can go out for recess anymore, including the kindergartners. What we really need to do is get those people who, caused the problem, get them back where they're operating the way they should be.
So what needs to happen in the coming year?
Well, in terms of national regulation, I would say the first thing we have to do is take care of the idea of too big to fail. The other things that get us a little stirred up and our blood boiling, like bonuses, how derivatives are handled, some of those things really cause us to take our eye off the ball just a little bit. Now, I'm not saying those things are not worth consideration, but really, to me, the central issue is this too big to fail.
What do you want people to come away with as we approach this new year?
I would like for them to understand that, first of all, the banks in Oklahoma are very different from what they read about and hear about on the national press. Our banks are much smaller. They don't operate like the larger banks.